Hey everyone, welcome back to the channel. I'm Katherine Marie, a stock market analyst with over 15 years of experience studying the US and global markets. Every week, I break down the key market movements, trends, and opportunities. Today, we're covering what happened in the US markets this past week, from Wall Street's rebound to trade tensions and the latest earnings buzz. So let's dive into it. First off, how did the markets perform? The major U.S. indices ended the week in positive territory after a somewhat volatile stretch. For example, the S&P 500 posted a gain of 1.7% for the week. The tech-heavy NASDAQ composite was a standout, up in the 2% range. So positive overall, but it wasn't a smooth ride. Volatility came back into focus. Investor jitters around regional banks and trade tensions with China had markets whipsawing throughout the week. And comments from Donald Trump that steep tariffs on China may be unsustainable helped lift sentiment. So in short, markets climbed, but with caution. Now let's look at the major themes behind the moves. 1. Banking and credit concerns. Regional banks were under the spotlight this week. Firms like Zions Bancorp and Western Alliance Bancorp revealed loan and fraud-related issues which sparked fears of broader credit stress. On the flip side, major U.S. banks posted solid results that helped temper the fear. 2. Trade and China. Trade risk remains a backdrop. The easing of aggressive rhetoric toward China boosted risk sentiment, which in turn helped stocks. 3. AI, technology, and earnings. Technology and AI continue to drive interest. For example, major firms announced partnerships in chips targeting AI workloads. Also, earnings season kicked off. Many large banks beat estimates, which is a positive signal for corporate health. 4. Fixed income yields. Treasury yields were also in motion. Yields on the 10-year dropped below key psychological levels this week amid the flight to safety, then rebounded. Lower yields tend to signal growth concerns, so the market is paying attention. So, looking under the hood, some sectors outperformed the rest. According to data, real estate and communication services topped the list with weekly gains of approximately 3.4% and approximately 2.9%, respectively. Large cap growth, especially in tech, led the gains while breadth was a little thinner, meaning many of the big moves came from fewer names. That means if you're following the market, pay attention to what's driving the broad moves, not just headline indices. Now let's talk about risks and what to watch. Of course, there are risks, but here are 3 to keep front of mind. Number 1, credit and banking stress. The issues among regional banks could widen, especially with elevated interest rates and private credit concerns. Number 2, trade escalation. If the rhetoric with China or other global counterparties picks up again, we could see sentiment reverse quickly. Number 3, growth versus inflation. With treasury yields and inflation still in the mix, any surprise data, either weak growth or higher inflation, could rattle markets. So here's the takeaway. The market ended the week with gains, driven by strong earnings, easing trade rhetoric, and growth optimism, but it wasn't without turbulence. Volatility remains elevated, and the underlying risks remain. For investors and watchers, this next week is to stay nimble and informed. And a quick disclaimer here that I'm not giving a call to buy or sell anything. Please do your own research, consider your risk tolerance and your horizon. If you enjoyed this update, hit the like button, subscribe if you're new, and drop a comment below. What are you watching for next week? Thanks for watching. I'll see you in the next one. Stay safe out there and bye.